Is my money safe in the bank? Where do wealthy people put their money? What do they do with it? Are there warning signs that I can actually understand that will tell me when the recession is coming or if there is a recession coming? Who's in charge of the system? What's their end goal? Why are they doing this? And how can I protect myself and my family? These are the questions that we're going to dive into in The System. Welcome to The System. You can ignore reality, but you can't ignore the consequences of ignoring reality. Burying our head in the sand is just not a viable option at this point. We have to face the truth that stands before us. I'm Renaldo. I retired last year, and at the time of my retirement, I had a bank account at a large bank that consisted of a checking and a savings account, and I had put away a little bit of money into a 457B, which is basically like a 401k. I had absolutely no idea how the banking system worked. I had absolutely no idea what a stock, an option, currencies, what they really were. I was what's considered a passive investor. So after retirement, I went on a mission. I went to one of the top schools online, one of the most popular at least, online to get my financial planning certificate. And you know what I learned? Traditional education sucks. All I did was spin my wheels and do mathematical computations that wasted my time, and learn definitions that were very confusing to understand, wasting time doing it. If I wanted real wisdom, I had to get it on my own. I went to seminars. I started following the true professionals who have been doing educational work for 20 plus years. I started reading books that these professional individuals have written. I have mentors who I follow every single morning. I want to keep my finger on the pulse of the market so I can understand what's happening. But what I realized, there is a lot of information that is unnecessary out there. And if we can cut through the fat and ask the right questions, we can make a reasonable, educated guess as to our belief of what's happening based on the facts that we can gather. But the problem is, it's overcomplicated, and it's overcomplicated intentionally by the creators of the system. Therefore, I am obligated to create a public service announcement series so that I can educate people like myself. This public service announcement series is meant to simply uncover the truths that are hidden in plain sight that we all know are there. We just haven't found the bottom of that rabbit hole yet. So let me guide you. The information in this video is not intended to be financial advice. This is a thought-provoking video meant for entertainment purposes only. Make sure you contact a certified financial advisor and enter a contract with someone you trust before making any financial decisions. Is my money safe in the bank? What is money? Where does it come from? How does it work? How do the banks work, for that matter? Who regulates them and protects me? What happens to my deposit when I put it in the bank? Speaking of that, can a bank fail? Can it collapse? These are the questions that we have to ask to get to the bottom of whether or not my money is safe in the bank. What is money and where does it come from? I'm not a historian. I'm not an economist. I gather most of my information from Lynn Alden, from Mike Green, from Dr. Chris Martenson, from George Gammon, to name a few. And this is what I've got. But I would suggest that you take it upon yourself, if you're curious about the history of the dollar, to search it for yourself, to see what you come up with. But this is the result of my studies, of what I've come to find to be true. The US dollar, at some point at the beginning, was actually a reserve note that you could bring to a bank to go and pick up your gold. It was on the gold standard. Up until 1971, you could trade your dollars for gold, and that was the note that gave you the right to pick up your gold. That ended in 1971. In 1974, it became the global reserve currency as a result of the petrodollar agreement between the United States and Saudi Arabia, and it was adopted worldwide. Because of its adoption worldwide, the denominated debt for most of the globe is US dollars. The US dollar is the powerhouse. It's what has created the euro dollar system, which is a global system where all the banks transact based on their assets and liabilities on their balance sheet with each other. It's all one interconnected chain. That is really the system, is that interconnected chain. Just understand that the global reserve currency is the fiat currency of the United States. Fiat currency means that it's issued and backed by the full faith of that government. The three requirements that it takes to be a fiat currency is, number one, it needs to be universally accepted. I have to be able to use that currency in a variety of locations, and it still has to mean the same thing. Number two, it has to store a standardized unit of value. It has to maintain that same value in the different locations where it's universally accepted. And finally, it has to have a non-friction transaction. Okay, what does that mean? An example of a friction transaction would be me trying to take my gold coin and shaving off a sliver of it, which might take a minute, especially to get the right weight, and then take that sliver and pay my mortgage with it. It's not how the system works. It needs to be universally accepted, it needs to store universal value, and it has to be smooth, fast transactions in order to be considered fiat currency. Money comes from loans and government spending. That's where the ones and zeros magically appear on balance sheets, in accounts, on screens with the ones and zeros. Kind of a hard pill to swallow, I know. It's true. Money comes in the form of a bank issuing a new loan or a government issuing a new treasury bill or treasury bond for the most part. I would highly encourage you to look a little bit deeper, and I have a reference video that I'm going to show you in 1 second. But knowing that money needs growth to thrive and survive, when loans are paid off, they go away. They no longer are in the M2 money supply, which is another whole topic. It's an inflationary asset. They expect that it's going to lose 2% value annually, and that's a low target. Again, I'm no economist. I'm not a historian. These people on the screen are. These are at least very good references where you can start, because these are the people who showed me about this topic. If you would like to find a very good video that explains it, I would highly suggest that you watch How Money and Banking Work by Renaldo. This is a video that you're going to want to see, curious about the history and the inner work fiat currency. How do banks work? Banks run on what's called a fractional reserve banking system. What that means is that the bank is required to maintain a certain fraction of your deposit on its balance sheet in case you demand your deposit back. You demand a withdrawal. Typically, that standard was running at around the 10% mark from everything that I've been able to discover. However, on March 26, 2020, the fractional reserve banking requirement was reduced to 0. Can you think of anything else that happened on or around that time, March 26, 2020? They claimed that it was so that they could add liquidity to the market. Sounds like they added volatility, but we'll take a look and see. So to illustrate this point of the fractional reserve requirements, well, we can come to see the chart for our very self. The required reserves of depository institution, the banks. Right around 2020, January, by February it started to drop, and what happened by May? What happened by April? Zero fractional reserve requirements of your deposit for the bank to hold in case you need it. This is the chart. So who regulates the banks? Who protects me? So the Federal Reserve is a central bank of the United States, and it has 12 sub-central banks within it that make up that bank. So a central bank is a hybrid between a government-ran and a private-funded institution. What could possibly go wrong when you have appointed individuals running it, right? The Federal Reserve has a branch called the FDIC. Probably heard of it. And that FDIC is your insurance, up to $250,000 per account. So you're safe, you're insured. How does the FDIC exactly insure you again? Glad you asked. They have the Deposit Insurance Fund. That Deposit Insurance Fund, as of about a week ago, had $125.3 billion. Also, as of a week ago, it stated that the insured deposits were $17,536 billion, leaving Federal Reserve ratio at 0.71%. However, if you Google it, it claims that 1.35 is the minimum 1.35 reserve ratio. Is the FDIC reserve ratio 0.71%? Or is it the 1.35% minimum that they claim? And why are the numbers so difficult to find? Do a little digging. Tell me what you think. Feel free to comment. The central banks are private funded, but who are they private funded by? Who owns them? You have to wait. You have to wait for part 4, the who. So what happens to my deposited money? This slide comes with a warning. I'm not an economist. I am not an accountant. I don't study bank balance sheets. They are complex. However, from the context of where does my deposit go on their balance sheet, that's the focus of this slide. So where does my deposit go? Your deposit goes on their balance sheet as a liability, if you look that up. However, it doesn't meet the definition of a liability because the bank takes your deposit and they loan it out in the form of credit card loan, in the form of small loans, in the form of credits to other people, corporations, businesses. You'll never know. It's loaned out so that they can make a return on their investment, which is your deposit. Does that sound like a liability to you? Or does that sound like an asset to you? Because it's on their balance sheet and they're making money off of it. Sounds to me like the liability is you, along with other creditors, along with other business costs. You are the liability. Your potential demand for that money, the liability. But the money itself is on their balance sheet and they own it and they use it. And they have no fractional reserve requirement to maintain any of it in case you want to withdraw it. And the FDIC is running Well, at least at a 1.35% ratio, but it's really more of a 0.71% ratio. You can ignore reality. You can't ignore the consequences of ignoring reality. So let's talk about rights. When you signed on the dotted line, fine print for your account from your bank, there's a high probability that you signed away your rights to it as a primary creditor. And what I mean by that is primary and secondary claims on assets to a bank balance sheet are the majority share owner of the banks and the secured creditors. If you would like, you can look up this term, residual claim on assets. If you Google the term residual claim on assets, there's going to be a big old picture of your face that comes up because you get the leftover. I get the leftover. There's an entire series called The Great Taking that's put out by David Rogers Webb. I would highly encourage you to look it up to see where your claim and ownership on your derivatives, the ones and zeros on your accounts, where do you lie on that? Another individual, Dr. Chris Martinson, put out a great piece called The Crash Course, and he also has Peak Prosperity, which is their website, and I would highly encourage you to look them up if you want to get into a little bit deeper level thinking when it comes to ownership, property rights, and how the system is essentially taking your wealth, whether you like it or not. The takeaway is that you have a residual claim on your assets, and the banks and institutions and brokerage accounts where you store your derivative value, primary ownership of that asset. And I hate to be the one to tell you, but it is true. Can a bank fail or collapse? Let's talk about losses. There are two categories when it comes to gains and losses on a balance sheet. There's realized losses and gains, and there's unrealized losses. According to Google, by definition, an unrealized gain is an increase in value of an asset that an investor has not sold. They give the example of a stock position, but I would also argue that real estate would fall into this category. An example of that would be someone sitting on a house that they believe is worth $1 million, but there's no buyer right now to purchase it because of the economic conditions. That would be an unrealized gain. It's not cash in their pocket. It's sitting there in an account, hypothetically speaking. So, in the term of unrealized losses, as of the last quarter reporting, which was approximately 1 month ago, the FDIC reported that the large banks have $517 billion in unrealized losses. I'm not going to do the disservice of trying to explain it better than this video right here that Lena puts out. It's called, just look up bank failures. You can see it on the screen. I'm going to put a link to it in my video as well. She explains it better than I can. However, this is accurate information. The Deposit Insurance Fund, if you recall, the most accurate number that I found, I would hope that you look for yourself if you're going to, don't take this as gospel. This is the numbers that I found. $125.3 billion in the Deposit Insurance Fund. And the banks just so happen to be sitting reported $517 billion. If you're asking if a bank can fail or collapse, let's move on to that topic. Do you remember back in March of 2023? It started a bit of a tidal wave. Silicon Valley Bank was one of the largest bank failures in the United States history. Signature Bank, very large bank failure that needed to be bailed out. First Republic Bank, Heartland Tri-State Bank, and Citizens Bank. Look up the numbers if you'd like to see the staggering numbers of losses that we experienced in March of 2023 by these banks who most of you have probably never even heard of. I'll let you come to your own conclusion on whether or not you think it's possible for a large bank to fail or collapse. So is my money safe in the bank? We know that money used to back commodities, that being gold and oil. We know that it's still the petrodollar and the main fiat currency that is behind the global reserve system. In order to make a fiat currency, we know what the criteria is. We know that money is loaned or spent into existence and that it's inflationary in nature. We know that the banks take all of the reward while you take all of the risk. We know that the Federal Reserve is the main central bank in the United States of America. We know they have a branch called the FDIC. And in that FDIC, they have a deposit insurance fund with approximately $125 billion in it to cover over $17 trillion. We're not going to get into the ownership just yet of the central banks, but we will in part 4 of the system, the WHO. We know that our deposit, when it goes onto the bank's balance sheet, it goes under a category that they claim is a liability, but it acts just like an asset. And you certainly seem to be the liability. We know that the current unrealized losses of the major banks, according to the FDIC as of about a month ago, $517 billion, not to mention the $9.3 billion in bad loans. But we know that one of the largest bank failures in U.S. history happened a little over a year and a half ago, and it was swept under the rug by the mainstream media. I can't answer whether or not your money is safe in the bank, but I certainly have come to a reasonable conclusion based on this information for my own finance. And as a result, I maintain in my checking account a certain liquid amount that I need for my monthly bills, and the rest is not on their balance sheet. I encourage you to look at the rest of the system. There are 6 more that are just as detailed as this. The next one being on brokerage accounts. Question that we're asking ourselves on part 2 is, where do the wealthy people put their money and what do they do with it? Then we're going to break down the macroeconomic environment and see what's really happening in real time. That's going to finish up the first half of the system. Second half of the system is for the second level thinkers out there. If you want to find out who's behind this, why they want it, and how you can protect yourself, please stay tuned for the entire system series, PSA 1, Part 1, the banks. Thank you.